Hello and welcome. My name is Serena Richardson and I am an RSTP trainer. Today's webinar is on audited financial statements, and this is an important topic for those organizations who intend to apply to become a sponsorship agreement holder. I'd like to introduce our guest speaker to you today. We have Audited joining us. He is the CEO for Progress Group Incorporated. This is an organization that conducts audited financial statements in Canada. Audited, why don't you tell us a little bit about yourself?
Thank you, Serena. I've gone through an extensive auditing experience, including with PricewaterhouseCoopers, which is my prior organization. And we have done significant audits in the for-profit world and not for-profit world. Part of my involvement in this organization and this platform is I have an immigration background. I came to Canada when I was 14 years old as a war refugee from Albania. So I went through the significant immigration process from welfares to subsidy components, so on and so forth. I'm very thankful of Canada giving me an opportunity to not change my life, but also change my family's life and future generations' life. So I've always been wanting to give back as a sign of appreciation to the immigration community in any platform. This opportunity was presented to us to apply my company's skill set with extensive audit experience to organizations that do a relentless job of providing opportunities for similar families like mine to bring them to Canada and give them an opportunity for a better life. So I have a personal attachment to this process, and I also have a fiduciary responsibility for myself to want to assist the process as much as possible.
Thank you so much. Well, it is a pleasure to have you joining us today. And just to let you know, this was Jonah's initiation. I have been struggling a little bit trying to understand audited financial statements so I could communicate and train. So I do appreciate you volunteering your time today to do this presentation with us.
My pleasure.
So before we begin, I am just going to go through the IRCC requirements briefly about audited financial statements for those applying to become a sponsorship agreement holder. And then we're going to turn it over to Jonah to talk a little bit more in detail about that process of audited financial statements. And then he's also going to talk a bit about preparing for that application period. You may not feel that you're ready to get an audited financial statement, or you maybe think you are, but you might not be. So he's going to talk a little bit about that. And then we'll talk about ongoing costs as well. And then we'll take your questions at the end. So IRCC has the requirement for organizations who want to apply to become a sponsorship agreement holder to obtain an audited financial statement. And you must obtain that audited financial statement for the most recent full year period. So that's typically tied to your fiscal year end. And you must obtain that audited financial statement within 6 months of that fiscal year end. So ideally, IRCC would like to see that you had received the audit opinion from the CPA within 2023. That would be ideal. But of course, they understand that depending on the fiscal year end, it may not be possible to get it for 2023, but it does have to be as close to 2023 as possible, because you are also required to ensure that that audited financial statement is dated within 6 months of submission of your application to IRCC. So that SAW application, that audited financial statement must be dated within that 6-month period prior. The kinds of things that IRCC will not accept in place of audited financial statements are something called a notice to reader. And I'm going to get Jonah to talk a little bit about these kind of documents and why IRCC wouldn't accept them. And we'll get him to speak to that in a little bit. The other thing that isn't acceptable in place of an audited financial statement is a review engagement report. And bank statements alone would not be sufficient. They do have to be audited financial statements. And QuickBook reports alone would not be acceptable, or tax forms alone would not be acceptable in place of submitting an audited financial statement. And the audited financial statement does have to be an independent audit, so it cannot be conducted within your organization. It has to be done by a third party. And without it being an internal audit, so basically, the audit cannot be conducted by someone, even if they had CPA designation within your organization. It has to be done externally. And it must be conducted by a certified professional accountant. And we'll talk about that in a moment.
So this slide is very important, is the foundation of the principle of this conversation. So why an audit versus any non-acceptable format, which we see here? An audit is an independent review by fully trained CPA accountants that have the responsibility to report their findings, not only to the organization that is providing the audit, but also to the readers of these financial statements, which in this sequence is IRCC. They are the readers of these financial statements. So the auditing process has to be a sacred process that has nothing to do with inside the organization. It has to be an independent body. So to go through the process, our notice to reader is actually zero assurance. In our world, assurance is audit. So that means it talks about what is the level of reliability of these financial statements. So for anyone who is or has been doing notice to readers, these are great financial statements, but they have a zero assurance. That means there's no audit requirements. For anyone who's been doing or will be doing review engagement reports, review engagement reports have about a 50% assurance when they provide the financial statements. The problem is they do not provide full assurance for the reader that the financial statements have been audited. So it's a bridge between notice to reader and an audit, but it's not a full audit, which IRCC requires. When we go down the step, bank statements are great, but again, bank statement is provided by a financial institution. It's not audited by a CPA firm, and bank statements are not financial statements, which is required by IRCC. QuickBooks reports is our internal reports created by an internal software, therefore are good and utilized for information only, but it's not an auditable report, which IRCC will require. Tax forms are something you are providing to CRA or our government body. It's about the information you're disclosing, but yet again, you can disclose any information to CRA, does not mean it's audited, and that information is different from an audited report. For bigger organizations, your audited financial statements will differ from your tax returns you're filing to CRA. Hence, IRCC requirements, it does not meet the audit requirement that is required. So when we look to the left side of the screen, as I mentioned before, it has to be provided by an independent auditor, regardless if your organization has qualified CPAs internally or not, because there's going to be it has to be an arm's length transaction, making sure that there's no biases. It cannot be done internally, and it has to be done by an organization or an individual that is qualified, which they have an LPA, so it's a licensed public accountant.
So for the chartered professional accountants, according to IRCC's requirement, the CPA that you hire to do your audited financial statement, they must be a member in good standing with the organizational body that governs CPAs in Canada. And they must be qualified to conduct audits within the province that your organization main office is located. And they also must perform audits according to current CPA Canada standards.
So as we said, there's certain requirements for a CPA or a CPA firm to meet in order to be qualified to issue an audited report. This is for the protection of the company that is doing the audit report, but also more importantly is for the protection of the user of this financial statements. In this situation, IRCC is a user just as the bank is a user, the lawyers are users, anyone who could be your members are users of this financial statement. So there's some strict requirements of who is trained, who is adequate to perform this audit. So I want to make sure that everyone is clear on that. So if you do have accountants or someone you're speaking with, please make sure they have this checklist ready before you engage them in anything, because their report might not be valid from a CPA standards, which in return, IRCC will not accept it.
So one common question people ask us is, what about nonprofit organizations? The question is, are they not exempt from having to get an audited financial statement? Well, for CRA requirements, the Canada Revenue Agency, they may not be required to do that, depending on, I guess, the financial cash flow level within the organization. However, it is a IRCC program requirement when you are applying to become sponsorship agreement holder, the cost of an audit. So for a smaller organization, you're going to look somewhere between $5,000 and $7,500 to obtain an audited financial statement. And for a mid-sized organization, anywhere from $7,500 to $10,000. And larger organizations, it's going to be in surplus of $10,000.
So not for profit. There is different categories in the Canadian income tax system. There is a for-profit world, which most of the organizations perform. There's a non-for-profit world, which are organizations that could be in this situation, could be immigration organization, could be sport relation, or could be even religious based. And there is the organizations that are charitable organizations. So there's three platforms. Non-for-profit and charitable organizations do not require an audit. Doesn't mean they cannot do one, but CRA does not require them to do an audit. So in this situation, if your organization is non-for-profit or charitable, there's two separate components, they will require an independent audit report, even though it's not required by CRA or the government, in order to apply for IRCC, in order to be considered. So I want to make sure that you are understanding that this may be an investment in your organization, if you're a non-for-profit or charitable organization, that you don't have to provide to CRA, but it is something that it is applicable if you want to be part of this program. When we talk about cost of the audit, there are different organizations in different components. We have done study analysis about the fees within the province of Ontario and within Canada. For any corporation that is a licensed public accountant, just for estimate purposes, you're looking at a range anywhere between $5,000 and $7,500 for an audit for a small organization. To give you a bit of a background behind it, it does not matter if you have generated $1 or $1 billion. It's not dependent on the volume of money. It's dependent on your processes. So you could be a one-man or one-woman firm, or you can be a 10-woman, 10-man firm. Those are completely different. We have to audit processes. We have to audit financial infrastructure. We have to audit board of governance. We have to audit legislations. There's a lot of these components that do not mention financial amounts of dollars. Hence why audits are a little bit more expensive and is the highest level of assurance you will ever get for your organization. Hence why banks, IRCC, or other big organizations are requiring this type of procedures, because it checks more than just the money in the bank. It checks the whole health of the organization. If you're mid-size, if you're bigger in size, again, not a dollar value, but operation value, if you're bigger inside, the audit testing is much greater. It requires more time. It requires potentially additional staff to do the audit, and it requires additional follow-up with the people on as decision makers. Hence, those audit fees do increase as you do increase in size. If you are at the greater scheme and you have multiple offices, you have double-digit staff, and you have different operations, maybe even internationally, those audits are specific for those organizations, and they could take a significant amount of time. Another thing that is very important, because we have had this situation before with clients in this program, is understanding the timeliness of when an audit can be done. I will give you recommendations that the fastest a professional audit can get done if everything is in order will be anywhere between 30 to 45 days. Or if the audit is more complex or there's more components to it, can reach up to 3 months. Hence why CRA is advising or has requirements that allows you up to 6 months to get it done, because they do understand the work of an auditor may take a much greater time to get it complete in order for the client to file this report with CRA and or IRCC or anyone involved within the process. As Serena mentioned as well, there's a timeliness component. So your organization has a fiscal year end. That means your year end can be any part of the year, April, May, June, July, anywhere in the year, and you file in a 12 consecutive month period. So it's not always January to December, and most likely most organizations do not operate on a calendar year. Therefore, if you are a February year end, let's assume, the 6 month will go above and greater than the application date. So you have to be careful to make sure that the year before that has been audited, because that audited statement date, so it's 6 months after your year end, is going to be within the application process to make sure. If there's a significant period of unaudited report, I think that's something that you guys can communicate directly with Serena and or our firm to see if there's any mitigation processes we can do to make sure we tie the gap between when an audit was finished and when the application is. Keep in mind, even though hypothetically I'm a July year end, my audits are done by December, that doesn't mean your company's audited as of December. They're audited as of July. So anytime after July, there's no audited approval. So there could be a significant period of time where the audit has not been performed. And that's for you have to be proactive with your accountants or financial team to make sure that we're filling in those gaps. And that's as far as goes into fees and the audit process. Okay, so I got a question here. How do you define mid-size or large business size? So that's a very good question. One of the things that I would recommend is you'd have to have this conversation with your accountant, because you could be a mid-sized firm, but let's say operationally you're working really well. You have trust accounts for the funding, you have different bank accounts for operations, you have dual signatures on your checks, you have the right approval processes with different leaders, different departments, then your audit will be smoother than a smaller organization with no controls. Part of the audit is we do control testing. Control testing says, how do we move from this point to this point? Who can move the needle? Who has decision making? And what impacts does it have? One of the things we do as auditors, we make sure there is no biases or there's no, we call it economic dependence on the organization. So for example, if I have an organization and I'm the only one, that means I can sign any check, I can decide what I do with the money, I can decide how to move the needle. That's usually an audit risk, because that means if I wanted to do something malicious to the organization, it's me, and I can make all the decisions I want. But if an organization is bigger, and this is what the differentiate between smaller and bigger, if they have certain things in place, then they're going to be better off. The fees why we put the smaller and bigger is because bigger organizations, think about, they have more processes, they have more leaders in each department, they have more more paths of movement. They could have an accounts payable department, they could have an accounts receivable department, they could have 3 or 4 immigration officers, they could have 4 or 5 offices that can operate in 3 or 4 provinces. Again, it all depends on the size that they have and the size that they're operating in. I hope I gave you a bit of a brief idea of what we would consider, a small, mid, or a bigger organization. You are correct. So the size of the bank account is not relevant to the size of the audit or the complexity of the audit. Number of employees will significantly increase the risk and increase the testing. The numbers on the dollars on your bank will not automatically increase. Now, is there more work to audit $1 versus $1 billion? Yes, but it doesn't automatically mean that you have a more complex audit, and doesn't automatically mean that you have to pay significantly more in audit fees. So it depends on processes, it depends on people, and it depends on the widespread of the organization. Then one of the last factors is amounts in the bank or dollars in the bank.
How does one find a reputable certified professional accountant or a firm that can conduct audited financial statements?
Excellent.
Yeah.
So there's a couple different ways. One is, if you don't have an accountant currently or financial consultant, definitely ask them. There might be someone in the area that can provide the service. The second part is like anything in life, you can Google or you can look at, different accountants in the area that provide the certified professional accountant services. The last one, which is more complicated, you can go to the CPA site. There is a list of public accountants that are in the region that could perform an audit. The problem with that is that list gets updated, once a year, or gets updated when the firm changes. So it might not have the right information. If you're looking for a quote or if you're looking for something else, again, you can always reach out to me to see if there's something that our firm can do to assist you. If it's something that you need someone local and you are out of province, then I'd highly recommend just looking up either whoever is performing your accounting financial service, ask them if they know an auditor in the area. The second one, I would look at Google. I'd look at anyone that is a CPA firm. And again, when you get started, please, it's very imperative that you show them either this presentation or you jot down the checklist. Ask them those questions. Are you this? Are you this? Are you this? Before we get started. Can any CPA holder do the audit? So there's a couple things that we have to differentiate. CPA is a designation. Think about it as a doctor or lawyer. Audits are a special trusted service that only a CPA can do. But in order to get this extra level of assurance, you have to have an LPA, so CPA and an LPA, and the LPA is a licensed public accountant. You can have it as a firm or as an individual. So again, you could have a CPA accountant that cannot do an audit. But an audit has to be done by a CPA. So CPA first, LPA second. But again, if you ask whoever you are dealing with, if you ask those 3 questions, those checklists, they'll tell you right away if they can or cannot do it.
Great. Thank you so much, Jonah. Now, this leads me to kind of like a related question. How do I know if someone is allowed to do an audit? How do I avoid a bad actor, somebody who would want to deceive and pretend that they could do audits, but in fact they can't? Because you don't want to find out as an organization that IRCC refuses your application because it's not a valid audit.
And that's a very good question, and it has happened in the industry in the past. So one of the things I would do is I would look at whoever you're discussing with and making sure that processes are consistent. And there'll be a lot of terms, a lot of knowledge that you are not going to be aware of what they mean. Once you're ready to say, okay, we're happy to move forward, before you sign engagement scopes, before you do anything else, either ask for their LPA license or CPA license. So there's a license number on both. A secondary choice, if you want to go further above and beyond, you can contact CPA and saying, I am dealing with XYZ. They're performing an audit on my organization. Am I safe? Are they licensed? Are they approved? CPA is a public governance body, which they will answer you those questions. So it's not a private question. You can ask those questions for anyone you want, and they will tell you what they're qualified to do versus what they're not qualified to do. But Serena, that's a really good question, because unfortunately we have had those situations where clients in this industry or other industry that might not be very comfortable or familiar with financial infrastructure, they get engaged, they spend all the money, and unfortunately those reports are not qualified reports.
Yeah, thank you. I recall in our conversation before the webinar started, you said that you would be suspect if somebody were offering an audited financial statement for $4,000 or less. That would be kind of a red flag. Yeah.
Correct. And let me explain more on that. I mean, because as you can see, it is the highest license of a financial professional in accounting that you can get. So think about it as a doctorate. Unfortunately or fortunately, we spend a lot of money to get those licenses. So for someone to be able to provide that service below, I would say, what it costs them, there's a bit of a suspicion there, right? Because it is like I said, it's the highest level of assurance. There's nothing higher than an audit. You cannot do another report that is going to say anything else what an audit can. An audit is technically a 97.5% accuracy rate. In order to achieve that accuracy rate, not only you need trained professionals, not only you need adequate processes in your own organization to perform them, but you also have to have a significant insurance liability. There's just a lot of significant costs that impede us from being able to perform something at what I call below fair market value, because it would not make sense. So be wary of those numbers. Hence why we put them in there.
Thank you so much. So it does seem quite costly, and as you've mentioned, it should be considered an investment towards becoming a sponsorship agreement holder. Is there actually any way an organization could save money when obtaining an audited financial statement for the purpose of becoming a SAH?
Really good question. So one of the mechanisms, and this has to be accepted or agreed upon by the accountants, one of the mechanisms, if there are ties between the organization and the accounting firm or anything else, and there's this need or requirement of giving back to a community, an accounting firm will have to charge price for the audit, but they can turn around and donate that feedback. We have seen this a lot in organization. We've seen this a lot in instances. Now, it's a private and personal conversation with that organization if they're willing to do it. And that's the only way you can save. It would be illegal for any accounting firm to do an audit and not charge you for it, because it will stop one of the audit requirements the CPA has, which is fair pricing charge for fair services. So no accountant will not charge you. If you hear one of those, be very careful. And no accountant will charge you below fair market value, because if CPA was to do an audit and they're saying you charge below fair market value, we believe there's an independence risk. Because you're charging fair market value, they can disqualify that audit. Other things I would recommend: you can be a non-for-profit charitable organization. This is an investment into a significant process. Investment is in the sense of, once you're audited, and I believe, Serena, I think the members would know, it's not something you do every single year. There is a bit of a process in there, and I'm not sure about how often the repeat process is. So it's an investment to get into the program, and there's a rotational period of time when the next audit has to come in. The second, it will significantly improve your own organization. Think about, you're going to have fully professional trained auditors that are going to come in and will tell you, I'm not going to say everything, but 97.5% accuracy of everything that you are not doing correctly, everything that you need to improve on, and everything that could be misleading. Auditors are the ones that will catch potential fraud or misappropriation of assets. This is important for an organization, especially when you're running immigration organization, and if you're in the mid to big size organization with a lot of people running around, the controls are usually very loose. So you want to make sure that those controls are tight. And the third part, just from a financial standpoint, I think being able to look at it as an investment to get into that program and opening the doors is quite important for any organization to do. So the cost of performing an audit significantly underweighs the benefits that you get by just being in the program, not considering your own benefit as an organization to know that I've been audited by professional firms, and I can go to the banks, I can apply for loans, I can do whatever I want, because you have this sort of red carpet treatment that, you have a clean set of records and you can go anywhere you want. But it also gives you an idea, or even if someone does an audit and there's a lot of weaknesses, which we have had in the past, and the auditor says, well, at this point in time, we cannot give you an opinion because there's a lot of uncertainties. Okay, well, here's a path I need to do for next year to be able to be eligible to go in the program. Here's a 5 or 10 things I need to improve. So to me, it's always an investment in your organization for any of the services that you provide.
Thank you, Joan. I'm just going to jump in here and speak to something you alluded to. This is the one-time cost at the beginning. However, it is a periodic expense that you'll be required to obtain an audited financial statement every 5 years going forward if you retain your agreement with the Government of Canada. And so every 5 years, you'll have to spend that money on the audited financial statement as a minimum. But yeah, like you mentioned, if you see it as an investment in the program, there are ways to kind of offset the costs. Currently, the sponsorship agreement allows for sponsorship agreement holders to charge co-sponsors, people who want to co-sponsor with them, up to $250 for administrative costs. Now, you can't charge the refugees this money. So if you're working directly with refugees, you cannot charge that expense to them. But if you're working with a co-sponsor, you certainly could on a case-by-case basis. Many sponsorship agreement holders choose not to do that, however, because raising the funds for the settlement alone, just to bring the newcomers to Canada, the sponsored newcomers, is extensive. We're talking $16,500 for a single individual. So, it's up to your organization to decide whether you're going to use that administrative cost to offset the cost of the audited financial statement. Next question. Yes, this one kind of was important to me, and it might be to others. Can an audit be done outside of a fiscal year? So the case scenario I want to propose to you, you mentioned somebody whose fiscal year end might be August. They have 6 months to complete that. But IRCC's submission deadline is, for example, the 30th of July. So in order
Mhm.
to meet both of those requirements, 6 months since your fiscal year end, but also 6 months within the submission period. So let's say you're going to submit the application July 30th. And so it leaves you, I'm thinking like a day or two. It's really narrow to meet those both 6 month commitments. So how do you do that? Can the audit be done outside of a fiscal year?
So in short, you can do what's called an interim audit.
Mm,
So let me explain to you how that works. So let's pick August year end.
mm,
Report only says you're audited by August 31st.
mhm,
The report can come in December, November, doesn't matter when. And then you have from August all the way till next July of unaudited
mhm,
activity. So we call it interim audit. Interim audit, that means I can do an audit for a period of 3 months, 6 months, 9 months, 10 months, a period of less than 12 months.
mm,
If I do an interim audit, let's say all the way till April. So
mhm,
April 30th is going to be my interim audit. So it'll be September, October, November, December, January, February, March, April. So let's say 8-month audit.
mhm,
My 8-month audit in April, give it your 90 days, will be done by end of July on the 3-month period and will fit the criteria for RCC. What does that
mm,
mean? It's the same thing as a full audit, just less work, right?
mm,
Because you're looking 8-month versus 12-month audit.
mm,
But the caveat there is you must have audited statements prior on the last fiscal year end. That
mm,
means you have to audit August and then do an interim audit. If you
mm.
don't have an audit before, you cannot do an interim audit following a notice to reader or a review engagement.
Right.
So those are the differentiations. So when you're looking at potential cost, if your year end is not close within that 6-month period, you may potentially be looking at not double the fees, but significantly higher
Mm.
fees than just one audit.
Yeah, thank you for that. So
No
in
problem.
my mind, when I think about this, it would not make sense then if you intend to apply to become a SAW. You either have to, eat that extra cost because it's essentially, the cost of an audit and then almost
Mhm.
again. Would it make more sense to change your fiscal year end then? And is that an easy process?
So that's what I highly would recommend if they were clients of ours.
Mm,
Why pay us twice?
mhm,
Change the year end. You are going to be in this program, I'm assuming, for a long time.
mhm.
Periodically, you will be doing this audits. So it makes a lot of sense for you to switch.
What?
Switching the year end is very simple,
Oh,
by
good.
the way. There's no cost at all. It's just an association letter that we or your accountant will send out. For XYZ reasons, we have decided to change your rent from this time to this time.
Mm,
It's not complex at all.
that's great. So if you think about audited financial statements, in my mind, there's a certain period of time within a year that is a busier season, perhaps, for you doing audits, and maybe less busy. So if I were an organization that needs to set my fiscal year end, what would
Mhm.
ideally be the best one that would meet IRCC's requirements and also be a
Got it.
less busy time to obtain one?
Got it. So let's work backwards on the timeline. So if we're 6 months, I'm assuming from a July 31st, I'm assuming we're looking at December 31st is the farthest you can go from a year end. As accountants, as professionals in this industry, that is the last year end we want you guys to have, because there's a lot of accounting reasons behind it, which I would recommend you consult with your advisors or accountants. So I would look at the 3-month period of the year. So you have January, February, or March. Maybe April, but April you're cutting short because you have only 3 months to do an audit in order to apply by July 31st. Unless your books and records are very clean and you can do an audit in 3 months. But if you are identifying that there's a lot of cleanup to do, I would not push all the way to April. So I'd pick January, February, or March. Once this process is done, Most accounting firms are very busy during the month of March and April and beginning of May. That's when your personal tax season in Canada happens. That's when a lot of those accounting companies are going to be dedicating their time and attention to the existing clients. Then they start the audit process, I'd assume mid-May. So you have May, June, July. That's the 3 month of working period. If you have hypothetically a year end in February, okay, if my auditor is going to start in May, I have March and April to clean up my books or clean up whatever I need to do. So when I go to them, I give them clean set of records so they can perform an audit as fast as possible. And that's why January, February, March are your golden months. You can push all the way to April. But like I said, if an audit is going to start in May and you just close your book in April, there's going to be a lot of adjustments, like your bank statement won't come till mid or end of May. So auditor cannot start without the bank statements being there. There's a lot of impeding things that are potentially not consider April as a year end. So January, February, March.
Those are the golden months to choose
The
for
golden
fiscal
months.
year end. Thank you.
Exactly. And it will make your accountants happy and it will work happy.
Thank you. That's very helpful. I think people appreciate knowing that. I just wanted to make a couple of comments. One is that if your audit was started in May, remember you have to have the audited financial statement included with your application by the deadline. Please be aware that IRCC will not let you email them and say, my auditor says they can't get me the audited statement by the deadline. Is it okay if I send it later? They're going to say no, unfortunately. They need a complete application by that deadline. So be sure that your auditor actually can do your audit by that deadline that you can submit it in, because they have other clients and they have a huge workload. So be sure that they will have that audited financial statement to you in time. Otherwise, you will have to wait until the following year and invest in another audited financial statement. If my organization is in good financial or organization position to actually invest in that audited financial statement for the purpose of applying to a SAH, how do I know if I'm ready? I know that the accountant will probably tell me, but what things do I need to look for before I even get to that point?
Excellent question. And this is something that we do with new clients onboarding. So there's something called a pre-audit checklist. So it's about 4 pages long, not to scare you, but it's about the accountant being sure they're able to perform an audit. So the client has to be ready to perform an audit. The accountant has to accept the audit engagement, saying that we are ready to perform this audit for you. Main aspects of those pre-audit questionnaires are going to be, are your documents ready? Meaning bank statements, invoices, receipts, anything that your operation has. Are they organized? Are they kept well? Digital or physical, doesn't matter the order, but those have to be readily available for the auditor to obtain when they request it. The second thing they will ask is, do you have the time for us to do this audit? Most of the audit will be dependent on the organization. If the organization is busy, or we have seen organizations where the main leaders are not available for a certain period of time, the audit cannot be performed because there are a lot of questions that have to be answered during those audit periods. And lastly, I would say, are you content with how the organization is performing in terms of processes? Start from like, is there a company policy somewhere? So there's a handbook somewhere. Okay, maybe not. Okay, do I have rules and responsibilities for my staff? Okay, maybe not. Do we have a decision path? Who can accept money? Who can put money in the bank? Who can move money? Like, is there a decision path, or anyone can do anything they want? Maybe not. If you are not ready on those few checklists, then the audit will not be ready because the auditor will ask you those questions. Another thing that is very important for everyone to understand is an auditor is independent. So they're not going to come and say, okay, fix this and then I'll audit you. Is the opposite. We come in when you're ready to do an audit. And that's why we have to be independent. Once you're ready, we perform the service. So an auditor will come in and perform an independent service, but you could have this discussion with an auditor saying, if my organization is sitting XYZ, would you be comfortable to performing an audit? And this is a pre-audit questionnaire. That's why we have to go through a bit of a due diligence process to make sure we as auditors accept you as a client in order for us to perform an audit. Before an auditor comes in, please make sure internally everything is correct as much as you can. You may not have an accountant on board, you may not have a CPA on board. That's okay. There's also other things you can do. For example, in our organization, we have a separate independent company that just does bookkeeping and support services. Bookkeeping and support services companies will provide you the adequate training to be ready in order to perform an audit. That is not an auditor. That's a separate company providing a separate service. So if you're in that situation where I don't know what I'm doing, I don't know if any of this is making much sense for me, and I can't ask an auditor to do an audit because I know I'm not ready, can I go to a bookkeeping support service company that can potentially bring me up to a certain level where internally we're confident that we can perform an audit, hence we're going to reach to an auditor. Hopefully that gives you a little bit of an insight. At the end of the service, we have options. We can say, this is a great audit report. That means there's no insufficient information. So has to be something that is clean. We can qualify our opinion saying that you did a great job, except we cannot give you an opinion on certain things. Let's say we have seen a lot of organizations that, for example, they don't use trust bank accounts. And we say, because the bank accounts are tied to a personal bank of one of the directors, and there's a lot of information that are personal versus business, we cannot give you the confirmation that the funds being used for this organization are strictly untainted. And from an auditor, there's the last opinion, which is probably one of the worst ones, where the auditor says, these organizations cannot be trusted from an assurance perspective. There's fraud, there is incompetent processes, and there could be potential litigations down the road. So part of the audit too is also we check with your corporate lawyers if there's litigations, if you're being sued in any way, shape, or form.
Thank you, Jonah. You spoke a little bit earlier about there might be an audit opinion where they state in that report that they cannot give an opinion on a specific area. It's been my experience that when IRCC receives that kind of an audit, the application is refused. So you want to make sure that you're not in a position where the auditor is going to have a conditional statement or whatever that's called, right? Where they're excluding a certain portion. So that's really important.
And I want to make this relative for the members. So what we have seen a lot of members in your industry, usually those comments on that report come from what's called revenue recognition. Revenue recognition is basically, can we satisfy, as auditors, can we satisfy our assurance that all the money being collected is accurate? There's a cutoff procedure, and this is something that can be vouchable. So vouchable is making sure that it's tracing the money. A lot of organizations like this, they will go into events where they're just collecting cash from members. If the collection of that cash is not traced back to the bank, or there's not even a simple form, Bob gave me $20 cash and they signed it, auditor will say, we cannot comment on the revenue recognition of this funding. Therefore, we cannot tell you if the money that they're saying they made within a year is accurate or not. We're not saying it's fraud. We're not saying that is wrong. We're saying that we cannot give you the assurance that this is correct. So for any organization that is dealing with cash, wires, checks, and ETFs like transfers, those are auditable because they come to the bank. Cash is something that is not auditable. So I just wanted to give everyone a relativity if you fall within those categories.
Yeah, that's really appreciated because IRCC does assurance checks. And in particular, one of the prime reasons they want audits to be conducted, they want the assurance that money coming in for these sponsorships is not coming from the refugee, because that's considered illegal. And so that's a safeguard, is to ensure that when you're collecting donations or people contributing funds for that sponsorship, that you can have a paper trail, a trace back to that person who provided that money. And even in some cases, if they say that individual that it was from their savings account, going back further, well, how did they get the money in their savings account? Did it come from their income? Can they prove that it came from their income? So I want to recommend that you take a look at the Community Sponsors Groups Guide to Private Sponsorship. That guide 2201, or even the Groups of 5 guide, it gives you explicit instructions on how IRCC expects you to document and collect funds, and the type of things you have to have set up for those funds held in trust accounts.
So if anyone is not aware of what a going concern opinion is, a going concern opinion is an auditor stating their professional opinion about an organization's inability to perform their operations in the future. Why? Could be financial reasons, could be lack of controls, could be significant departures of high-valued individuals in that organization. So that could mean, from an auditing perspective, professional perspective, we want to notify the reader of those financials that yes, they may have passed an audit, but be careful, we're concerned about their future. Okay. So the question is, what is a general rule for an auditor to say there's a going concern? So there's no general rule. What is the probability, or what is the statistics in the market that a going concern company happens? It's all based on industry basis. Obviously, as you guys can imagine, for example, during COVID, think about all the restaurants that were closed. A lot of these bigger chain restaurants, auditors had a lot of going concern reports. We don't know when doors are going to open up again. We don't know if financially they're going to be operating. We don't know if all the people they laid off are going to come back. So I wouldn't concern about the probabilities of what the auditor would say. I would look at more, is this something I need to be worried about, with the help of an auditor to give you the analysis? So I need to be worried about, and if the risk is there, which it could be, what are my mitigation factors? What can I do to make sure that going forward, there's no concern for my organization? So those are the things that we can ask.
Thank you so much. I know that this is a valuable discussion, and we have learned a lot from you, Jonid.
Thank you, Serena.
We are going to provide a way to contact Jonid. Jonid, where are you actually located in Canada?
So we are located in Ontario. So we have offices in the southern Golden Horseshoe. So if anyone's familiar, so that's Toronto, Oakville, Niagara, so that region. I will pass you our reception and also my executive assistant's information. They're the ones that will take on the onboarding calls. And if it's something that you would require, like a one-on-one, just a quick guidance, we can set up a meeting and we can look at on a one-on-one basis. Thank you, everyone. Thank you, Serena, for organizing this. And I wish you everyone a great day.
Good luck, everybody. Best wishes for you as you maybe apply to become a SAW this year or in future years.